Oil long-term technical analysis for the week of June 27th, commoditiesmansion.com. The light sweet crude contract, as you can see, had a fairly bearish week this previous week, dropping several dollars, and in fact dropping about $8 at one point. But is currently testing the all-important 90 to 92.50 area. It's roughly a $2.50 zone that's supportive, and it did form a little bit of a hammer on Friday, suggesting that perhaps a bounce was coming. It makes perfect sense, as it is very common for markets to fall fairly quick like this and then find a bounce at support. The question now becomes whether or not the support will hold, obviously. And what we want to see is a couple green candles in a row in order to get us convinced that we are perhaps moving higher. We're not sellers of this contract yet, and if we do manage to break the 90 level, we should see 85 and perhaps even lower. A solid break of 90 on a daily close would indeed be very bearish for this light sweet crude market. Brent seems to be finding a floor at the 105 a barrel level. As you can see, we did manage to break through it slightly on Friday, and this previous week has been very bearish, as we've seen a $10 sell-off basically of the commodity. 105 is vital, and if we do manage to break 105, 100 would be the next level that we'd pay attention to, as it is a big psychological, big round number. But the truth of the matter is a break below 100 sends this commodity just falling, probably another $10-$20 a barrel before it finds any kind of even reasonable support. What we want to see to buy, on the other hand, is perhaps a little bit of a basing pattern, several green candles. But on top of that, another thing that we should be paying attention to is the fact that we could be forming a little bit of a head and shoulders, as we can make out from this pattern, which of course is very bearish. And if this head and shoulders does come to be true as we break, it is a $20 head and shoulders. So a break of 105 would have us down to $85, which of course is a support level down here pretty quick. So very bearish signs, but at this current level, what we want to do is we want to sit and wait and see what happens around the 105 mark to make our decisions. Head and shoulders like this do form and never get triggered quite often. So the fact that head and shoulders has formed in and of itself is not a reason to sell. But if we can get a daily close below that neckline, certainly we've got a ways to go down.